Okay, good morning, folks, and welcome to Swing Trading Today, where we're going to discuss the pre-market activity. Then we're going to segue over and into members' stock chart requests, which is where we review the symbols that our members submit for me to review, as well as review a couple of watch stocks. Let's first talk about the U.S. dollar. When I spoke about the dollar last on yesterday's Swing Trading Today, we were trading up here above this upper band of support in red, and I mentioned that we had topping tails. There were signals by the market that was showing signs that the dollar was under pressure, despite the fact that we had the ability the prior day to rally off the lows, close back above support. But then ultimately later in the day yesterday, we did in fact roll over and we broke down below support. Now what we're doing is we are putting in what appears to be a dead cat bounce. And what I'm anticipating here is a break below this lower band of support. If that occurs, you could expect that this prior support level on the dollar at around 96, what's the low here? 96.39 is going to get retested, and in all probability, it will break. So, with us somewhat bearish on this weakening U.S. dollar, what are we looking at? What do we want to be a part of? Gold. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right. Trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Gold has had a very good week. We are up this morning $1.20. We have broken out above the upper band of resistance. Let's turn this lower band red now, because we know if it breaks, well then my bull story on gold just came under fire. And we'll have to reevaluate the trade. But at current, we're seeing a consolidation along this breakout point in green. We attempted to rally yesterday. It was rejected. I think we're going to try yet again today. One concern I do have here is the fact that we have a breakout on RSI, yet we're pulling back, putting in lower highs. Could it be just a possible retest of the breakout point because traders are OCD? Sure. But what we need to see here before we got all giddy about gold is we need to see a breakout above this resistance level. And we want a validation on RSI to confirm the breakout on price should it come. So this is our tripwire for gold. Now, what we also like are the gold miners as well as silver. Silver is looking really good, and we have broken out of this triangle formation. So members can expect that we may be adding to our silver position perhaps as soon as today, because what we'll get today is a view of how we're closing out the week, not necessarily the day, but it's Friday, obviously, and we get an opportunity to see how we're setting up to close out the week. Do we have a bullish week in terms of price action, setting this up for a continuation breakout? We'll know by the end of the day. And then this weekend, I'll be putting together the week ahead commentary where we'll discuss our strategy for the coming week. We'll also review the health of the overall markets, how they performed, where do we think they're going in the coming week, what do we want to buy, what do we want to short. So members, stay tuned. Let's move on to the stock market futures. We'll go to the S&Ps first. All right, so yesterday we reversed off the lows of the day. Now, did I go buying at the lows of the day? No. It's not the way you want to play this market right now. We are, in all probability, entering a bear market. Now, were I a day trader, sure, that's the way to play the market. Play the extremes intraday and go home flat. But that's not what we do here. We're more strategic and more tactical. That's not taking anything away from day traders. I know some very good day traders. It is simply not our forte here. All right, so what we need to do here is hold this lower band of support. This is what we're looking at. We retested it, this bar here, which is about to close in 10 minutes. At current, it is 4:58 in the AM. So we have 10 minutes to go. We're off the lows of the session, and we need to see a continuation move higher. Now, if we fail to hold this support level, well, then we're going to do a retest of yesterday's lows. The question then becomes, do we put in a higher low? Do we retest the prior low and hold, both of which would be bullish? Or do we fail? Do we take out yesterday's lows and move down to new lower lows either today or early next week? Now, today is Friday, so that makes it short covering Friday. A lot of traders are going to want to go home flat who have short positions. So we may get a bias to the long side today. So even though we get a strong day today, we may want to not get overly aggressive to the long side in anticipation of a possible continuation breakdown early next week after trading houses spend the weekend analyzing what their book looks like and what they may want to take off the table going into the new year, especially given the probability of seeing a lot of tax loss selling. So don't paint yourself into a corner by getting overly aggressive to the long side right now, because as it stands, the path of least resistance remains to the downside despite yesterday's rally off the lows of the day. Okay, the NASDAQ. I think the NASDAQ is a bit easier to read than what is the S&P 500 technically. Yesterday, we did break through resistance. We rallied up and into the primary upper band of resistance on a 4-hour chart anyway. Now we're pulling back a bit, down around a 1/4 percentage point. It's at times like these where I use the adage, you should be fearful rather than hope, because I'd current be fearful were I to purchase or want to purchase the NASDAQ in its ability to break out above this upper band of resistance. So do I want to be long right now? If I bought right now, I would be hopeful when I should be fearful. I would rather wait for a breakout above this upper band of resistance when I'm buying the fact and not the hope. So I would avoid right now. And we are rolling over here on RSI. All right, so the jury's out. Let's take a look at the bond market. I spoke about the bond market yesterday. We were rallying. This is the 10-year Treasury note price. And we anticipated a pullback. We did ultimately get a pullback, but I'll tell you, it wasn't a significant pullback. And we are now pushing higher, yet we're seeing topping action, okay? These topping tails, much as what I discussed yesterday on the US dollar, that's a sign of churning. You have sellers above here selling strength. Now you see this upper band of resistance here in white. Let's pull back. This is the higher level view. Let's appreciate the fact that what was a resistance level and support level back here. Remember this head and shoulders setup? This was the neckline. And now it is acting as resistance yet again. So with this as a known, I would expect a pullback on price, which means that we may get a pop on yields. Let's take a look at Bitcoin. I haven't watched Bitcoin in a while, and it is a mess. Let's take a look at where we were at by pulling back here. It's not even measurable on this chart. I mean, these are the futures. Here's a weekly chart. And the futures went live back here in December of last year. I can't believe it's been a year already. And we are at all-time lows on the futures. And it looks like we're going lower. So I see no reason whatsoever to go speculating on Bitcoin, at least for now anyway. So on a 4-hour basis, we are a bit extended to the downside here. We could go lower. Any rally could take us above this upper band of resistance. But to get to that point, we first need to get through resistance down here at, let's call it 3780. We'll round it up. We are leaning into the third standard deviation Bollinger Band, or were, I should say. And we're finally catching a bid. We had a bullish reversal bar last 4-hour period. This bar here just opened up less than a minute ago. So the jury is out. Let's see whether or not this support level holds or fails. If it holds, we'll rally up to 3,600. If we get through 3,600, we can have a very big rally up to between 4,800 to maybe even 5,000. No positive divergences to speak of on RSI. So I see no reason to act right now. If you're not long of Bitcoin, yet you want to be, your best bet, sit, watch, wait, buy strength. Right now, the path of least resistance is to the downside. I see no reason for it to end right now. With all the geopolitical turmoil out there, Bitcoin can't catch a bid. You have to ask yourself the question, why? Wasn't it built for geopolitical risk? Let's move over into members' stock chart request. Okay, folks, let's kick things off with Facebook. Now, this is a daily chart. After a sell-off like we've seen of late, and this is just not Facebook. It's every chart out there right now. I'm looking at the weekly charts more importantly because it's going to give me that higher level view perspective of where we've been technically and where we may go technically. Now, on a daily basis, it's a bit noisy. I'll admit yesterday was a very bullish day. We had a bullish key reversal day. We saw volume come in slightly above average. So might Facebook be a buy here? Sure, you're getting higher lows and higher highs on RSI. I think that the risk reward is reasonable in that you know that if you bought what we closed yesterday, assuming that we don't gap up higher, that if you bought what we closed yesterday, that you need to put a stop right below this lower band of support. Now, what I find more important to look at is the weekly chart. And it's not as sexy as the daily chart. This is the higher level view. You have resistance above. Now, were we to close above the 145 level this week, I would be far more prone to buy Facebook. But as it stands right now, it's tapping resistance. It's failing to break out above it. And the vibe I'm getting here is that this may just be a dead cat bounce. Because if we close down below, let's call it 135, we're going a lot lower. So while the daily chart looks really good, the weekly chart does not look as good. Now, if we were to pull back and do a retest of 126.85 or put in a higher low, that would get me very, very interested in Facebook, but not right now. Google, same deal here as Facebook. A bullish key reversal day yesterday. Volume was above average, looking good. Now, Google, I'm a bit more bullish on than I am with Facebook, not for technical reasons, but more for the lack of headline risk that Facebook has been bringing to the table. And on a weekly chart, we broke out last week. This week, we did a pullback and a retest of support, and it held. So Google is far more interesting to me than what is Facebook. So members, more to come on a possible trade here on Google. Under Armour, weekly chart. Relative to the overall markets, Under Armour has had a very good week this week. It is up just over 0.75 of a percentage point. We're flirting with a breakout here. The number to watch is 24.69. We get a close above that level. Look out above. We're going to rally. I mentioned this the other day. We had an inverted head and shoulders setup. Left shoulder, head, right shoulder. Here's our neckline. Again, 24.69. We want to close above it. RSI has broken out. We have higher lows and higher highs. Stokes, same deal here. Daily chart. Yesterday on a daily chart, a bullish key reversal bar. We attempted to break out. Here on the 3rd, it failed. But again, bullish reversal bar yesterday on volume. Under Armour is looking very, very good to the long side. I'm bullish. ROKU. ROKU had been a disaster area, and the last time I spoke about it was several weeks ago, and I said this stock is going lower. And sure enough, it did go lower. We'll begin with the weekly chart, then we'll go to a daily chart. And we have been consolidating, and in fact, we are up on the week relative to the overall market. That's important, right? We're showing relative strength. Under Armour, ROKU, for that matter, they are outperforming Facebook and Google on a weekly basis. So that's good stuff. It's exactly what you want to see. Now, what would get me really excited about ROKU on a weekly basis is a close above 42.50. That would take us above the primary upper band of resistance right here, the upper band in blue. Right now, we're just barely holding on to this lower band of current support. But the chart is looking good. Were I a betting man and having to say, do we rally or do we break down here? Assuming that we close out the week where we are at current or better, I think that we're going to rally in the coming weeks. Daily chart. Now, what we're doing here is something that's very important. We are consolidating. In fact, we had a bullish key reversal bar on the 29th. We rallied up to 43.37. That's an important number. Why? It's because it's our pivot point. It's the center point of our W formation. We've formed the center point. We're now going to form the right side of the W. Once we get a breakout above 43.37, it's game on to the long side for ROKU. We have higher lows and higher highs getting put in on RSI and on Stokes. So the last time I spoke about ROKU, before I say any more, volume is a bit light here, folks, especially on a bullish reversal day. Just keep an eye on price action and volume action. You need to see volume pick up. Right, that's my caveat. Going back to my prior statement, the last time we spoke about ROKU, I was very bearish on it. Now the tide is changing a bit, and I'm a bit more bullish on the shares, but we're not ruling out a concern here with regard to volume. That matters. You need institutional demand to push these shares higher, especially in a market that is under such pressure. NVDA, bullish reversal bar yesterday, but on a weekly basis, Houston, we have a problem, okay? This is a dead cat bounce as far as I'm concerned. Could we get a higher high today? Sure. Is it an investment yet? No. We need to see a pullback and a higher low or a retest of recent lows to form a base and then proceed higher. Shopify. Let's go to a weekly chart first. We went into the week bullish on Shopify. If you're not currently on our email distribution list and you want our best stock charts for the coming week, go to the website. If you're not watching it there, click the link at the bottom of this page in the video description section. If you're watching us on YouTube, go to the website, enter your email address anywhere, and you'll get our best stock charts for the coming week. That'll come out tomorrow, being Saturday. And we have recaptured the prior lower band of support. It was resistance. If we close out the week where we're at or better, very bullish stuff. Expect to break out next week. We are already breaking out in RSI and on stochastics, looking really good here on Shopify, assuming that we close where we're at or better on the week. At current, we're trading better than 2.75% on the week to the upside. NIO. I warned about this trade the other day when we were threatening to take out the lower band of support on this bullish reversal bar. the following day, I mentioned that we had broken down below the lower band of support. We got a continuation breakdown. Then yesterday, we flashed a bullish key reversal. I think that speculators can buy the shares on a new daily high with a stop right below 6.75. And I would add to my long position on a breakout and a close above resistance here at $8.35. So NIO looking good. FEYE, weekly chart. Another stock which has been one of our watch stocks, and it is showing relative strength versus the overall market. The last time I spoke about FEYE, which was early in the week, or perhaps last weekend, one of the two, we had broken out above this upper band of resistance. I mentioned the W formation, the double bottom setup, the higher low on Stokes. We have a beautiful base here. We had a bull flag set up. We are breaking out. We have a continuation breakout this week. We're very close to a buy signal on FEYE. Members, if we pull the trigger on any of these trades, I will send out an alert. And that is it for today, folks. Everybody have a profitable trading day. Members, I will talk to you on the week ahead commentary. Non-members who are on our distribution list, I will chat with you tomorrow on Best Stock Charts. See you then. Hey, folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our 1-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.